Wow, so this week you really dug deep into some market data. And this market deep dive closing report for November 21st, 2024. I have to say, it really opened my eyes. I think we should just jump right in and see what we can find.
Yeah, there really is a lot to go through. I mean, the S&P 500 is seeing gains for the fourth straight day. And that's what's making the headlines, of course. But there are some trends beneath the surface, really fascinating ones.
Yeah, let's get into it. The report talks about this cyclical strength. We're seeing industrials, financials, materials all doing really well. These sectors are really tied to economic growth. So what does this mean, this move away from the big tech stocks, the ones that have been doing so well for so long?
It could be a sign that investors are feeling differently. When these sectors, the cyclical ones, start to outperform, it often tells us that investors are more confident about where the economy is going. They're anticipating more spending, more investment, just overall growth.
So are they thinking there's a boom coming? But then there's Nvidia, another tech giant, and they just had some interesting numbers. They beat their earnings expectations. Usually that's a good thing, right?
Right.
But their future guidance, it wasn't as strong as some analysts hoped.
Yeah, and that's what makes it so interesting. Their share price actually dipped at first before it recovered. It really shows you how the market reacts to these little details. Beating expectations is one thing, but if the future doesn't look quite as good, investors can get a bit scared.
Yeah, like they're reading between the lines, trying to see if the company is really healthy for the long term. And speaking of reading signals, there's this whole debate about cutting interest rates. The report says it's basically 50-50 whether the Fed will cut rates again in December.
Exactly, a 50-50 chance.
Hmm.
Some people at the Fed are optimistic about inflation, the progress they've made, but others are saying we need to be careful. So this economic data coming up, especially the jobs report and inflation readings, those will be the deciding factors for sure.
So everyone is waiting to see which way the economy goes. But here's something I thought was really interesting. While the market is doing well overall, some of the big tech names, like Tesla, Microsoft, Apple, even Alphabet, they're not doing as well. They're lagging behind. What's your take on that?
Well, it might be a sign of a rotation trade. It's like investors are moving their money around, going from one part of the market to another, looking for better returns. It could mean they're moving away from tech stocks, the ones that focus on growth, which have been doing great. And maybe they're moving towards those cyclical sectors we were talking about.
So is it like a changing of the guard? What's making this happen? Are they just trying to make more money, or is there something else going on?
Probably a bit of both. Investors are always looking for the best place to put their money. Right now, they might be wondering, can these tech companies, the ones with high growth, can they keep this up? Maybe those cyclical sectors, they might look undervalued right now. And they could grow a lot as the economy gets stronger.
Right, it's all about balancing the risks and the rewards. But, the economic data, it's giving us mixed signals. It's a bit of a puzzle. We've good news like weekly jobless claims going down and more existing homes are being sold. But then the leading economic indicators, they're down and continuing jobless claims are still going up. So how do we make sense of all this?
It means we have to look deeper. It's not just about seeing one good number and thinking everything is fine. Like the jobless claims going down, that's good news. It could mean the job market is getting better. But then the continuing claims going up, that tells us some people are still having trouble finding jobs, so the recovery might be slow.
Yeah, it's more complicated than it seems. The report also talks about some interesting company news, like Snowflake, their stock went way up. They really beat their earnings expectations.
Yeah, it looks like their partnership with Amazon Web Services is working out well for them. It shows you how important it is for companies to work together these days. Especially in tech, things are changing so fast.
It's a win-win for both of them. But then there's Alphabet. Their stock went down after the Department of Justice filed that lawsuit, the antitrust lawsuit.
Yeah, that just shows you. The big tech companies, they're under a lot of pressure from the government now. It will be interesting to see what happens with that case. It could change things for the whole industry.
Yeah, it could set a new standard for how they're regulated. And then there's Deere. Their stock actually went up. Even though the agriculture market is struggling, high interest rates, not a great harvest. Why do you think investors are still confident in Deere?
Well, Deere is a strong brand, and they've been around for a long time. They know how to handle tough times. Investors might think Deere will be okay in the long run, and when the agriculture market gets better, they'll be ready.
So, even with all the uncertainty, some companies are still doing well. What about the economic data coming up? What should we be watching for in the next few days?
We have the University of Michigan Consumer Sentiment Report and the S&P Global PMI data. Those are the big ones. The consumer sentiment report, it tells us how people are feeling about the economy. Are they confident? Are they worried? That affects how much they spend, which is important. And the PMI data tells us about manufacturing and services, which are really important for economic growth.
So why is consumer sentiment so important? It seems like it's more than just how people feel.
It really is. When people feel good about the economy, they spend more money. That helps companies make more money, and that can push stock prices up. But if people are worried about the economy, they don't spend as much, and that can slow things down. It can even cause the market to go down.
It's like everything is connected. This has been really eye-opening, I have to say. But
Yes.
before we finish up, I'm curious about something. The new administration's taking office soon. What do you think? How will their policies affect the economy and the stock market in 2025?
That's the big question, isn't it? It's hard to say exactly what will happen, but we can look at what's happened before, and we can think about how their policies might affect certain industries, like trade policy. If they change things, it could really affect companies that do a lot of business overseas. And new regulations, they could be good or bad for different businesses.
So many things to consider.
Hmm.
But is there anything in particular, any part of the market that looks promising or any red flags? What should our listener be paying attention to as we go into the new year?
Well, it's going to be an interesting year, that's for sure. There are always risks in the market. That's just how it is. But times like these, when things are changing, they can also be good times, for finding opportunities. If you're smart and you do your research, you can make some money.
So we shouldn't be scared. We should be informed and be ready to change our plans if we need to. Sounds like we really need to understand what the new administration is doing.
Oh, definitely. What they do with trade, taxes, regulations, it affects a lot of businesses. Like if they want to make more things here in the US, that could be good for industrial companies, manufacturing companies, those stocks. But if they add more regulations, that could be bad for some companies.
It's like a game of chess. One move can change everything.
Yeah.
So what would you tell our listener, someone who's trying to figure this all out, trying to make good investments?
I'd say look at the big picture. Don't worry about the little ups and downs every day. Focus on the things that are changing over time, like how many people there are, what technology is doing, how people are spending their money. Those are the things that really matter in the long run. And look for companies that are going in the same direction as those changes. Those are the companies that will probably do well.
That's a good point. Don't miss the forest for the trees. Look at the big picture, not just the little details. Are there any sectors you're interested in right now?
Renewable energy, that's one. It has a lot of potential, I think. The world is trying to be more sustainable, using cleaner energy. So companies that are involved in solar, wind, things like that, they're going to grow a lot, I think.
Yeah, that makes sense. It's not just a fad, it's a real change in how we get our energy. This deep dive has been really helpful, I have to say. I feel like I understand what's happening in the market now and what might happen in the future.
Glad I could help. And to our listener, keep learning about this stuff. Ask questions. Don't be afraid to challenge what you think you know. The more you understand, the better you'll do with your investments.
That's great advice. Remember, everyone, even when things are uncertain, there are still opportunities out there. Just stay curious, stay informed, and keep digging deeper. We'll be back soon with another deep dive. Until then, happy investing.